Hello and welcome. It's a Wednesday morning and you are watching First Stick here on News 9, where we bring to you the morning buzz on the Lal Street. And the markets, they continue to recover. Nifty this morning has opened with moderate gains above the 22,400 mark. Bank Nifty is also holding above 48,000. The broader markets, they are up 0.5%. In fact, Nifty small cap has hit a fresh record high this morning, and the advanced decline ratio is heavily in the camp of the bulls. I mean, all in all, a very positive start to the day of trading, and I actually prefer this start over a gap up sort of an opening, and I'll get to the why in just a bit. But as always, let's first take the temperature of the global markets, because it's green everywhere, and a much stronger start to the day of trading for Asia as well.
Green everywhere, green in Asia. It continues from yesterday, but the talk was Tesla, who announced their results. Their first decline in revenue since 2020. Net profits fell 55% to 1.13 billion from the previous year. Revenues were down 9%, but their shares, they surged almost 13% after the results were announced. And Tesla, of course, has also been in the news that because they have laid off 10% of their workforce globally. And they have, Elon Musk, after announcing the results, said that he'll be committed to low-cost EVs in the times to come. Dow Jones closed in the positive at 0.69%, S&P 500 in the positive at 1.2%, Nasdaq Composite in the positive at 1.59%. Coming to the European markets, Stock 600 closed in the positive at 1.08%. Hang Seng this morning is in the positive at 1.48%, and Nikkei 2 is in the positive at 2.27%. It's green everywhere.
All right, and the Wall Street, I mean, it's on a mend after witnessing one of its worst weeks last week in the recent past, and it had fallen below some of the key support levels, so perhaps we are seeing some bit of a pullback over there. But again, it's a nervous pullback because the markets, they are moving in a rather choppy fashion across Asia and in the US as well. But the other cues that we track, I mean, it's flattish on a day-on-day basis as far as the 10-year bond yields are concerned. They are hovering in that 4.6 range still, and they have been there for the last 3 or 4 sessions. The dollar index, that has moved. It has fallen by about 0.4% or so. It's below 106 levels now. Brent crude, on the other hand, has inched up slightly. We left off the day at about $87.5 a barrel. Currently we are at about 88.4 on Brent crude. But coming back home, a very healthy start to the day of trading. Nifty, as we said, has opened above the 22,400 mark, and I like this sort of an opening because compared to what we saw in the previous 2 days, because the markets, I mean, in the previous 2 sessions we opened gap up, and if you look at yesterday's session, the high, the intraday high was very close to the opening level, so about 100-point higher gap up opening. There is not much left for the retail investors out there. Most of the upside, most of the good news is priced in right at the word go. So, from there on, we only typically see retracements. And but today, what has happened is that we have opened with moderate gains. The texture of the market from a global perspective is looking, much more solid this morning. We, the gains have extended in Asia, and Wall Street again, the second day on the trot, it ended in the green. But Nifty, again, as I said, opened with moderate gains. We have opened above the key resistance zone of 22,394, which was nothing but the 61.8% retracement level of that entire rally, of the entire fall actually, from record high of about 22,775 to the recent low of 21,777. So we have reclaimed that 61.8% mark yesterday. Once we were not able to meaningfully move above 22,400 odd levels, the markets declined by about 20-30 points by the closing. So today we are holding above 22,400, but that's good to see. But that said, 22,500 I think remains the main make or break sort of a level for Nifty, because remember, before we made that 250 point jump to record high levels, 22,500 had offered a resistance, a congestion zone for about 2 months. I mean, time and again the markets would get there but reverse course from there on. So 22,500 in my opinion remains the key for the index, but again a very healthy start to the day of trading. The broader markets, they are up 0.5% as well, and India VIX, I mean, after that 20% sort of a decline yesterday, it has picked up. It's up about 1.5%, but again at multi-year lows at just 10.35. But joining on the show now is Akshay Bhagwat, Senior Vice President of Derivatives Research at JM Financial. Good morning, Akshay. Thank you for giving us time here on News 9. And what a phenomenal recovery it has been for our markets, and across the board. I mean, most pockets of the markets are participating in the upside for the last 2 sessions at least, and the advanced decline ratio heavily in the favor of the bulls. I mean, where do we go from here, sir? Can we get back to those all-time high levels or possibly to 23,000 anytime soon?
Good morning, Suresh. So yes, the highlight of yesterday's market was the crash in VIX, 20% crash. And this just indicates that there is stability which is back in the system. Last week, exactly at this point, in fact, when I was on your show, the market was around 22,000 and there was blood on the street. There was panic all around. And I did say that, whenever there is such a situation, panic is always short-lived. And when it recovers after that panic, that recovery has been hard. And that has been backed by data points. Whenever such situations have happened in the past, you can pull out the records, how the market reacts after such huge, how it impacts after such catastrophic situations. Now, broadly, as I see the index here, 22,200 is a short-term support base. Stability is back in the system. Now, market is shrugging off its fears and getting back into the momentum mode as it has been before. 22,500 holds validity if you are a weekly trader. That's a short-term trading support, would not have much of a relevance. As you rightly mentioned, it is heading for its all-time high levels, and that should be achievable very soon. So, a very strong build-up in the Nifty. Longs are getting added. The shorts are getting squeezed out of the system back again, and as we head into the election season, I think from here on again the market should reattempt and cross its all-time high levels as I see the broader technical setup on the price charts.
Alright, and we'll get to Bank Nifty because today is the weekly expiry for the Bank Nifty FNO contracts, and also we have Axis Bank that will report its numbers. I mean, it will be a choppy session for Bank Nifty, and 48,000 of course has been that resistance zone. We are above it currently, but Akshay, 46,500, 600 odd mark is where we went in this correction. Are we done with that? Are we going back to that anytime soon, or are we done with that for now, or for good rather?
Yes, yes, we are done. That's for good, because now if you are considering those levels, then it means that the market might get into an issue. That's not the case. As I see the recovery, now the base is shifted up now to 47,500. That's the reading I derive based on the short-term trading parameters. And today is the weekly expiry, so it might be a bit tricky, but it may surprise you as well on the upside, because we have opened above the 48,000 mark. And if you see the data points, a lot of call writers are positioned as on yesterday at the strikes of 48,000. So it will be interesting to see whether how the call writers react, whether they can be squeezed out further, whether if they do, then 48,500 can be the surprise factor for today's expiry itself. And again, sailing north, 49,000 plus are the levels Bank Nifty should be heading to very soon. So I have a positive outlook. 47,500 is the new base which Bank Nifty has formed, and be ready for all-time highs in Bank Nifty, which may hit very soon as we move into the May month.
Good morning, Akshay. Now, Tata Consumers announced their results yesterday, and there was a big fall in net profits, over 20% year on year from last year. Revenues jumped almost 8.5%, marginal jump. The board announced a dividend of almost 175%, 7 rupees 75 rupees per share of 1 rupee. Their EBITDA went up 23% to 629.6 crore. The share is down 4% today. It is down almost 3% in the last 5 days. Time to get in. What do you make of Tata Consumers, or is it the sector which is basically falling short because of weak rural demand in over the last 1 year that is adding to these numbers for Tata Consumers?
Oh yes, so Tata Consumers, the results has seen the stock slipping a bit, maybe around 4-5%. But broadly, as I read on the charts, it's not much to panic about. Chart structure still signals that it's a buy on dip stock. A base of 1080 is already formed in the stock, and this dip is, I feel, offering you another opportunity to get into this stock from a short-term trading perspective. So 1100 is the support zone I see. If you're okay with buying on dips, that's the level you should be keeping in mind. Your stop losses should be below 1070, and a recovery attempt should be made by the stock very soon, which can see it testing its recent swing highs, which we saw a couple of days back at around 1175. So 1175, that's the first set of targets I'll be working with, and 1225, that's the target, the main target I will be aiming at. So a positive view broadly, it's a buy on dip stock. Post results might take a bit of a time to kind of settle down, but yes, be on the buying side still on Tata Consumers.
All right, another stock we wanted to pick your brains on is Bharti Airtel. I mean, the stock has been on a tear lately. It has, yesterday it surged by about 4% to hit a record high. In fact, even this morning the stock is up nearly, I mean, it's up marginally, but again, at record high levels. Akshay, volumes are good, but, on the price charts I'm looking at, it's relatively in that, oversold, overbought zone actually. RSI is in that 75-76 territory. What's your take here? Are we approaching that, the resistance zone over here, or is more upside in the offing for Bharti Airtel?
Yes, so telecom space has been on a roll lately, and a lot of stocks are completely outperforming this pack. Bharti Airtel, if I were to speak specifically, it's in a very strong chart structure. Still, there are upside targets of probably around 1400, 1430 due to come in the days. But if you're a fresh entrant or waiting to buy for this stock, I think it makes more sense to wait for a slight dip around 1300, which would be a more lucrative level from a risk reward payoff for taking a trade. So the positive view continues. 1400, 1420 is on. Just for new entrants, wait for a slight dip whenever it offers you an opportunity. 1300 is the right level to get into. Keep a stop loss below 1275, and then you may see the momentum taking it to the target areas which I mentioned.
1300 for Bharti and buy on dips on Tata Consumers. But Akshay, what are your picks for our investors today?
Yes, so these are more technical picks from my trading perspective. The first stock I would name here is TVS Motors from the auto space. It's more of a recovery candidate, has been beaten down in the last 15-20 trading sessions, attempting a good recovery, and I believe auto space can have a good trading bounce from the way the trading parameters hint for. So the target areas I look forward to is 2014, that's the first target, 2032, that's the second target, and I would keep a stop loss of 1918 on this trade. Second trade here is in power grid. That's from the power sector. And if you look at the broader chart structure, this sector has been on a roll. Little bit of momentum lately, but I believe the momentum should be on soon. Expect targets of 297 to 305 in power grid with a stop loss of 277. So power grid and TVS Motors are the two trades for the viewers.
All right, TVS Motors, Power Grid are on the radar of Akshay Bhagwat for the short term. Sir, thank you for your insights. Thank you for your time. Always a pleasure speaking with you.
Thank you.
But with that, it's time to slip into a short break. On the other side, Mohit, gang of Money Front, joins us.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When we look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
40 countries, 1,000 multilingual bookstalls, 1.25 lakh people, one destination, the New Delhi World Book Fair 2024.
So it's a great honour to be here. Thank you to the National Book Trust and those that have embraced us over recent days.
I was at the London Book Fair once and I had not participated here, but this fair is an ocean and it's beautiful.
This should be your annual spring picnic.
Through the power of knowledge, we are going to create responsible citizens with global skills and also global responsibility.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
40 countries, 1,000 multilingual bookstalls, 1.25 lakh people, one destination, the New Delhi World Book Fair 2024.
So it's a great honour to be here. Thank you to the National Book Trust and those that have embraced us over recent days.
I was at the London Book Fair once and I had not participated here, but this fair is an ocean and it's beautiful.
This should be your annual spring picnic.
Through the power of knowledge, we are going to create responsible citizens with global skills and also global responsibility.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching First Take here on News 9 and the markets. The recovery continues over there. 22,430 odd levels is where we are at currently on Nifty. In fact, very close to the day's high, but 22,450 to 500 zone, I think that is key again because, that was a crucial resistance zone. In fact, I'll take it further to 530 because that's the first high for the record high for the year that we made at around 22,517 to 525 levels. We made a couple of tops over there. So that from about 450 to about 22,530, I think that is a zone that we need to take out for further upside from here on, and we are approaching that. But again, a setup is looking rather good. Texture of the global markets is positive, Indian markets is positive. Most pockets of the market are participating in the upside. In fact, when we talk about laggards and something that has kept the lid on Nifty, it was Bank Nifty, and it is participating. In fact, about 35% of all the gains for Nifty this morning are coming from just three large private banks. It is Axis, HDFC and ICICI Bank. So and Axis again, we have to see the results today and how they come out, but also today is the weekly FNO expiry for Bank Nifty. But again, that pocket of the market remains the key because any outperformance or underperformance can significantly impact the trajectory of Nifty and the overall sentiment of the market. But That's for the headliners. Again, but we need to talk about the broader markets as well, because the small cap index has made a record high. It's in fact trading very close to its intraday high as well. The mid cap index is approaching that 50,000 levels. It's about 150 points shy of it. Again, the advance and decline ratio heavily in the favor of the bulls. So the texture again is looking very positive. And to understand from where we go from here on, because the recovery has been rather sharp. In just a matter of 3 days, Nifty has recovered close to 650 points. Let's bring on board Mohit Gang, co-founder and CEO of Moneyfront. Mohit, good morning to you. Thank you for giving us time here on News 9. I mean, again, a very strong recovery. In just 3-4 sessions, we have recovered about 650 points on Nifty. But I think the big highlight for the day yesterday was that big drop in India VIX, the fear gauge. I mean, the sharpest drop in nearly 5 years. What do you think led to that crash? Is the market not expecting any new hurdles anytime soon, or is it the calm before the storm? I mean, and if that's the case, where do we go from here, up or down?
Hi Suyash, morning. Look, honestly, I think as the name suggests, it's the volatility index, and it is as volatile as anything else, or perhaps more volatile than all other indices put out there, right? So look, I don't read too much into the VIX index. Yes, it just gives you an indicator at times of extreme fear or extreme calmness. That's a good indicator to go, but perhaps in a market which is not throwing up any signals of an extreme fear or extreme calmness, it's not too much to read into, right? However, the index trading quoting at a level of 10, which I can see on your screen right now, is showing a fairly calm market. Honestly, it is showing that there is no volatility expected. It's also showing that perhaps it's when the index is fairly low, it also shows that you can try moving into maybe a little bit of I don't know whether if the index is bottomed out. If we think that the index is bottomed out, then perhaps it's a time to move into low beta stocks. And if the index is kind of peaking up, when you think the index has actually surpassed a very high level, then perhaps you get into low beta stocks. But again, as I said, you don't read much into it. But yeah, in times like the ones when you had the COVID crisis, the index actually shot up a lot because people were fearing the worst possible scenarios out there, right? That it shot up in the global financial crisis time, the US, the CBOE VIX. For India, also the problem, it's not a very developed index per se. Unlike in US, which is fairly accurate and fairly long-lasting index out there. So my sense is investors should not pay too much attention. However, it also shows us that the market for the time being has kind of settled with all its woes which are going around, and perhaps we can look for few calm days in the market.
All right, few calm days for the market ahead. But Mohit, the big reason for the crash in April was the global headwinds, what was going on in West Asia, and the bond yields, the dollar index, they being on the rise as well. And I mean, we are not hearing much as far as West Asia is concerned, but even though the bond yields, they have been essentially flat pretty much for the last 2-3 days, they are still elevated. We are currently at about 4.6%, and that's bad news for emerging markets. Why are we ignoring those the global headwinds that are coming our way, and could that perhaps be that spoil sport and cap our upside?
Look, I think you're fairly right out there, but from the West Asia perspective, geopolitical perspective, we aren't seeing any escalation per se, or we aren't seeing any escalation in the bad news per se. I think the issue is fairly well settled between Israel and Iran. It looks like though, right? And if that is settled, then I think globally, I think markets are fairly calm with that. With regards to the US 10-year yield, we have seen a very sharp spike up, right? From the levels of the lows which saw was 3.9 maybe 3-6 months back, and then it's continuously shooting up, and it's gone up to 4.6 because just the expectation of rate cuts is completely out of the window now, and perhaps market is only expecting a 45 bips kind of a rate cut by the year end, which also is questionable. There are two parts to this entire
calendar year or financial year end?
Calendar year end.
All right. Because right, from a lot of people we are hearing that perhaps there will be no rate cut, and maybe Fed could even potentially go for a rate hike, and that's coming from a voting Fed member, the New York president.
Yeah, that's what I said. Look, that 45 bips rate reduction is also looking very unlikely though, and it's getting pushed down, right? When we started the year, the dot plot was signaling 3 rate reductions. It's now signaling 2 rate reductions. It was signaling 50 bips and now it is signaling 45 bips. So it's been tapering down, and that's the reason the yields have not been easing off, right? But the yields have actually also not tested back the previous highs, which was I think around 4.95 was the level which it touched previously. So we are fairly at that 4.6 level, and I think perhaps market is anticipating that we settle around these levels, and from here on things get better. And that's one of the big reasons why the volatility indices are not showing any kind of trepidation from here on.
Good morning, Mohit. Now, the yields have spiked, as you said, but there's a tech rally in the US which is basically giving rise to a rally in the Asian markets, whether it is Hang Seng, Nikkei, or even the Australian markets. They are in the green today on the back of the US tech rally. Nifty IT in India is just up 0.2%. We have Nvidia, we have Tesla, we have Apple, all looking close, focusedly on India. Why is not India reacting to the US tech rally as much as the other Asian markets? Or do you see that happening in the immediate term to come?
Amit, I think, I agree to you that the tech rally in India hasn't picked up as yet. Even in US, it's not a very broad-based rally. The big heavyweights which we track very often are the ones which are perhaps doing the heavy lifting out there in US. However, yes, I agree to that point that the Indian tech giants haven't caught up. In fact, the large cap space on the tech side has been woeful for last few times, and to be honest, I have been very hopeful that this perhaps should change sooner than what we expect. But my sense is we still have 6 months to 9 months, at least at the bare minimum, for the tech sector to pick up steam, at least the heavyweights to pick up steam. My sense is when the market goes through this entire grind and entire cycle, and till such time that the high beta stocks continue to do the rotation in the market, which is when you have the old economy stocks, the PSU stocks, the banking sector all working well. I think tech and FMCG are perhaps a little too late in the cycle, and they will come they will come to the party closer to the level when markets are almost peaking up or are almost trying or almost too tired to then climb further up. So my sense is we are still 6 to 9 months away from a full-fledged tech rally.
All right, 6 to 9 months away from a full-fledged rally, but even the guidance coming from the IT companies, it's not too inspiring, Mohit. It looks like FY25 will be another difficult year for our information technology companies. But stay with us. We have plenty to discuss with you. But it's for now, it's time to take a short break. Congress is facing its biggest electoral challenge. Anything less than a close fight in the general elections will be demoralizing for the party cadres. The Congress is banking on its welfare outreach to woo voters. Will it work?
"40 countries, 1,000 multilingual bookstalls, 1.25 lakh people, one destination, the New Delhi World Book Fair 2024.
So it's a great honour to be here. Thank you to the National Book Trust and those that have embraced us over recent days.
I was at the London Book Fair once and I had not participated here, but this fair is an ocean and it's beautiful.
This should be your annual spring picnic.
Through the power of knowledge, we are going to create responsible citizens with global skills and also global responsibility.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
welcome back. You're watching First Stick here on News 9, and again we were talking about how the markets have been rather, they have staged a tremendous recovery in the last 3-4 sessions. Nifty is up close to 650 points, but there is enough and more for us to worry about. We were talking about the global factors, but back home it's the earnings season and a slew of companies will report their earnings today. Among the Nifty 50 firms, Axis Bank, Hindustan Unilever, LTI, Mindtree will come out with their report card. Among broader market names reporting results today will include names like Indian Hotels, Macrotech, Dalmia Bharat, Nippon Life AMC, Oracle Finance, Syngene, among others. But let's talk. And let's start with Axis Bank, because India's fourth largest lender is expected to stage a decent financial performance in the quarter gone by, with growth across segments and double-digit expansion in loans as well as deposits. Axis Bank is expected to report a profit of about 6,250 crore in the March quarter compared to a net loss of 5,728 crore in the year-ago period. The previous year's loss was mainly due to an exceptional charge of about 12,500 crore related to the acquisition of Citibank's consumer business in India. The bank's net interest income, which is the difference between interest earned and interest paid, may rise by about 8.5% year on year to 12,746 crore. Net interest margin, which is a key measure of profitability for financial institutions, may decline by about 11 basis points to 3.9%. And again, as I mentioned, brokerages expect a healthy growth in loans and deposits both on a year-on-year basis as well as a sequential basis. But coming to the stock, it has been an outperformer compared to the the other large private banks, and Mohit, I'll come to you. It looks at least cheaper than the large cohort of private banks. I mean, the price to book on HDFC, ICICI, Kotak is between 3 to 3.5. Axis Bank is much lower at just 2.6%. Could Axis Bank be the dark horse in the pack, sir?
Hi Suyash. So look, I think with Axis, it's always been some portion or the other which has been a cause of a little bit of a doubt for the markets, right? Previously, it was the change in leadership when the HDFC leadership was brought in to usher a generational change in the way Axis Bank will operate and how the bank will digitize the entire thing. There was a slew of doubt around that. And then I remember that was a time when Bain Capital picked up a huge chunk in the stock, and people were hoping that it will then usher in a good growth in the stock, but it didn't happen to the extent market was anticipating. And then the Citi acquisition in India, which obviously meant a huge charge on the books last year. And as I hear and as I understand from the street now, the Citi acquisition has been completely taken into account, and I think the banks have also started operationally integrating very well with each other. However, the full scale and extent of it, it's still yet to be known. Look, when huge sizes come together, and that is what we've been seeing with HDFC Bank and HDFC Limited, right? Markets have been fairly uncertain in terms of how the bank will move to the next level of growth. Axis and Citi merger was not that big a thing as compared to HDFC this thing, but yes, it was still a huge acquisition for Axis as a bank, and culturally the two banks are very, very different, right? So the integration is an extremely challenging integration, and that's the reason why I think markets has not been giving it the kind of valuations which other private banks have been taking on the street. Having said which, I think the numbers this quarter are reasonable. I would not say they are like real wow numbers, or they are significantly beating the market estimates or expectations. But yes, it's a reasonable set of numbers, and my sense is stock should work well along with the entire pack, because banking as a pack is looking very attractive. If you ask me, still my top pick will continue to remain as ICICI Bank in this entire space of ICICI, Kotak, Axis and HDFC. I think that's what market is also liking right now. And that is where all the bets are. And then I think second in the line will be Axis and perhaps Kotak.
Good morning, Mohit. Now, while Axis is in the green and reporting big profits, HUL is likely to announce their results today, and they are mostly flat. Whether it is revenue, a likely jump of only about 0.75%, net profits are likely to go down 2.5% year on year. EBITDA is likely to remain flat at 0.14% according to market analysts. And this is largely because of higher advertising spends, royalty payouts to the parent Unilever PLC, and the expiration of the GSK deal that will that's likely to impact all the indices. Their businesses, whether it is home care, personal products, beauty and personal care products, home care products, or food and refreshment businesses, they are mostly flat, except for beauty and personal care, which has likely contributed a 2% jump over the year 2024. Input prices cooled off, and the company undertook price cuts to the tune of 2%, which resulted in volume growth of 2 and 3%. But we look at the stock over the last 1 year, it has gone down almost 10%. It is down today. What do you make of HUL? I'm sorry. Is it the FMCG pack that is suffering, or is HUL too big and basically its own weight is basically getting it down?
Amit, I think HUL, the FMCG pack per se is very hugely dependent on the rural economy. It's very hugely dependent on how the monsoons will be, how the rural consumption is picking up, how the rural demand is picking up, how the rural economy per se has been doing, right? And there has been a lot of chatter around that rural economy should pick up around the election season, possibly the impact of which we will see in the next quarter if that at all happens. And I think by all indications, it looks like that post the elections. From next quarter onwards, given that the monsoon estimate for this year is also fairly good, I think the rural economy should show some signs of improvement. Also, I think we are expecting that private sector capex will pick up, and that should also lead to some rural employment and other things, and which should lead to further augmenting rural growth. Having said which, I think HUL is going through its own set of challenges. The challenge from the unorganized market, the local brands, is more than increasing every day in the Indian context, right? Every day we figure out new brands which are, it's like the startup story on the financial side, where fintechs are disrupting the way how financial industry is working, and that story is playing out in the unorganized market in the FMCG side, where the unorganized local brands are trying and killing the bigger brands and bigger names. So the competition is stiffer than ever, and I think that is where the pedigree of HUL, the management, the brand, the long-lasting vintage of the firm will perhaps come into play. But market is repricing the stock. Market is repricing from the average valuations of whatever 60, 65 odd times. The stock is now down to 50 times multiples, or maybe a little lesser than that, right? And my sense is there'll be a base which market will come at around. Good quality stocks with good managements, brands which last till perpetuity, will always price very heavily. And my sense is the stock should settle down or should bottom down either by this result season or by next at the worst. And though we don't expect anything extraordinary coming out, but from there on it should become like a good value pick. Not value in the sense that the valuations will be cheap, but compared to the historical averages and compared to the peer group, I think HUL will start looking attractive again within a quarter or so. And for patient investors, it's something to look at. For someone who's chasing aggressive growth and in Indian markets who really want to play the markets very quick and fast, then I think this is not the stock to go for.
All right, HUL is a patient man's stock. That's a word coming in from Mohit Gang. Sir, thank you for your time. Thank you for the insights. Always a pleasure speaking with you.
Thank you.
But with that, it's a wrap on this edition of First Stick. We'll see you at 4 on Last Stick. Thank you for watching.
India's ever-evolving urban landscape is witnessing a new